So there's a lot going on in Washington, D.C. right now. You might have seen the headlines: a canceled report, a big scandal, a new environmental rule. And on their own, yeah, they just seem like separate news stories. But when you put them together, they tell a much, much bigger story about a system that's under some incredible strain. Let's try and connect the dots. It really does sound like the start of a bad joke, doesn't it? What do a canceled economic report, a mortgage fraud scandal at the highest levels of government, and a new rule about wetlands all have in common? I mean, how on earth do those things connect? Well, it turns out they're not separate stories at all. They are all threads in this really tangled web of conflict that's shaking things up in DC. So for this explainer, we're going to pull on that first thread and just see where this whole thing goes. Okay, so our story kicks off with the Federal Reserve, the country's central bank, and they've suddenly found themselves completely in the dark on a piece of information that is absolutely critical. And the first domino to fall, it's a big one. The Bureau of Labor Statistics just announced that the October jobs report is canceled. Gone. Poof. Vanished. Why? Because of the government shutdown. They just didn't collect the data, and you can't just go back and get it. And, the timing here is just wow. It could not be worse. The shutdown's in October, the report gets officially canceled in November, but the real problem is that the Fed has a huge policy meeting set for December 9th. They have to make massive decisions about interest rates, but the next jobs report they can even look at won't be out until a week after the meeting. They are literally flying blind. And look, this isn't just some random statistic. The Fed chair, Jerome Powell, has said it himself. This is one of their key metrics. So what does this mean? It means the Fed might be way more cautious about doing things like cutting interest rates. And that, right there, has a ripple effect on your wallet. We're talking mortgage rates, car loans, you name it. But, a data blackout, that's just the beginning. The real storm is brewing inside the Fed's own walls. So now we're going to pivot a little bit from the external data problems to some pretty serious questions about integrity on the inside. This is where things start to get a little personal and very political. So you've got two major figures at the Fed suddenly under a microscope. On one side, there's a current governor, Lisa Cook, who's facing these serious allegations of mortgage fraud. And on the other, you have a former governor, Adriana Kugler, who was actually found to have broken ethics rules. It's a real 1-2 punch to the Fed's credibility. So let's start with Governor Cook. The allegations are coming from the director of the Federal Housing Finance Agency, and they're serious. But she is not taking this lying down. She's firing back, and she's firing back hard. Her lawyer sent a letter to the Attorney General calling the claims baseless and insisting that the loan documents prove there was no wrongdoing whatsoever. And then you've got former Governor Kugler. The Office of Government Ethics found that she broke Fed rules. How? By making stock trades during a blackout period. That's a time right before a big meeting when you are absolutely not allowed to trade. And her defense? Well, she says her husband made the trades, and she had no idea. Now, whatever actually happened, it's a really bad look for an institution that pretty much runs on public trust. Okay, so let's recap. We've got a data crisis. We've got an integrity crisis. But none of this is happening in a bubble. It is all smack dab in the middle of a massive political firestorm. So let's break down who's who in this fight. You've got the FHFA director, Bill Pulte. He's the one who made the allegations against Governor Cook. But now, you've got a group of 8 Senate Democrats who are demanding an investigation into Pulte himself. They're basically claiming that he's using his agency as a weapon to target President Trump's political opponents. And listen to this quote from their letter, because they are not pulling any punches. They're saying these referrals appear to have solely targeted prominent Democrats, including those President Trump has publicly threatened. I mean, they're drawing a direct line here, accusing a government agency of being used for political payback. So, this political battle, it's not just words and accusations anymore. We're starting to see real action being taken, and it's aimed at reshaping and, in some cases, totally getting rid of the government's financial watchdogs. So first, what is the CFPB? Basically, think of them as the consumer's watchdog. They're the federal agency that's supposed to make sure you get a fair shake when it comes to things like your mortgage, your credit card, or your student loans. And here's the thing. The current administration isn't just trying to tweak this agency. The plan is to shut it down completely. They say it's to get rid of regulations that are holding back business. And they've laid out a clear 3-step plan to do it. Nominate a new director to oversee the shutdown. And then, well, shut it down. a major consumer protection agency is literally on the chopping block. And it's not just about taking agencies off the board. There's also a big push to rewrite the rules themselves. Which brings us to that third piece of our puzzle, a seemingly technical environmental rule that actually has huge consequences. So to get this, you need to know about WOTUS. It stands for Waters of the United States. It sounds boring, but it's the key legal phrase in the Clean Water Act. In simple terms, if a stream or a wetland gets the WOTUS label, it's protected by federal law from pollution. If it doesn't, well, it's not. And right now, the Environmental Protection Agency is proposing a huge change. They want to narrow that definition of WOTUS, which would effectively strip federal protection from a whole lot of the nation's wetlands. So what's the thinking behind this change? Well, the EPA says it's all about cutting red tape and making the rules clearer for businesses. And groups like the National Association of Home Builders are big fans. They argue that if you ease these rules, it'll be faster and easier to get permits to build new homes, which could really help with the housing shortage. It's a classic case of prioritizing economic development over existing regulations. All right, so let's step back and put all these pieces together one last time. We've got a canceled report, scandals at the Fed, a nasty political fight, and a major push to rewrite the rulebook. What does it all add up to? What you end up with is a picture of a system that is seriously stressed out. The very basics you need for good decision-making, like economic data, that's gone. Trust in our core institutions like the Fed, it's being hit from the inside and the outside. And the actual rules and the regulators that are supposed to keep things stable, they're being challenged and changed right before our eyes. And that leaves us with a really big question. When the very foundations of the system, the data, the trust, the rules, are all shaky at the same time, what's left to hold it all together? It feels like the ground is constantly shifting, and you have to wonder, what happens if it all gives way?